Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. Well, I usually say morning. It's not morning. It's afternoon. Good afternoon, everybody. Well, we are here today to see the CME futures open because there's been quite a bit. Well, let's see here. Where should we start? Well, first of all, let me show you the screen here. So I am seeing liquidity for the treasuries, or sorry, I am seeing liquidity for the equity index futures, but not the treasuries. And I think that that's just because the treasuries don't know what to recenter on. Because see, it's got me all the way up at 999. I could like just scroll forever, but we'll see if that we fix that before that goes. If we are to look at Friday, so in the 10-year treasury, we had another pretty solid rout, and we saw interest rates rise above 4.5%, only to kind of chill out and recover later in the day. The fact that it continues to be, relatively isolated sell events like this kind of suggests to me that it is basis trades blowing up, but we don't really know for sure what's going on. S&P 500, well, it was kind of mixed. Now, one of the things was that they were saying that they were going to exempt, tech stuff. Hey, Paul. They were going to exempt tech stuff, and then over the weekend, they're like, actually, no, we're not exempting anything. Or, well, there was like a temporary exemption, and that there will be a different tariff for tech stuff later. So that's basically where we're at. So because of all of that, I do think that we will probably see quite a bit of interesting action when the futures start. And if we do, then we'll continue to watch it for a few hours. If we don't, then, whatever. We can just end early. Enjoy the rest of your Sunday. I'm really hoping that this sell pressure in the treasuries goes away, though. It's not really good for anything. So I'm trying to figure out if I've got a better way to center the DOM here. Okay, I have an idea. What if I come in here? Oh, let me make sure that it's on. Okay, yeah. What if I try to submit an order? Sell stop cannot be put at inside offer price or above account. Oh, okay. Can I put a bid? Doesn't let me put a bid either. That's interesting. So I was thinking if it would let me put an order on here, then I could like click on that order and like change the price that it's at maybe. But no, it won't let me do that. I can just scroll down. Oh, that's so annoying. And there's not a button to scroll down. What about if I use this? Oh, well, if I use this, it looks correct. If I press this button over here that says center, will it screw it up? Nope, it doesn't do anything. Well, I also kind of wonder if this over here in the treasury, or sorry, in the equities is even, see, it might just be the depth history. No, that did change something. Because I thought that you didn't start to see these orders until about 30 minutes before. Last time we did this, yeah? Well, I don't know. Might just watch quietly for a while. Wow. Gold can reach 4,500 by year end as UBS, JP Morgan, and Goldman upgrade precious metals outlook. Holy cow. 4,500 would be insane. It does seem, though, that gold has been performing so much better this time around. Cory Booker, there's enough smoke here to investigate insider trading on tariffs. This the one that drives me crazy about this is that nobody's talking about, well, might not be considered public information. It's entirely possible that they are trading on it, but that it is perfectly legal. I think that once we start getting changes, that we will recenter. It was no fear Sunday stream is no, this is not normal. So what we're doing is we are preparing ourselves for when the extended session on the CME starts up to see if there's any significant change. So I'm starting early just to get the stream going and let people pop in. It looks like, you know, people are coming in slowly. In fact, we're already to our normal numbers, which is surprising to me. You know, I thought it being a Sunday, not the regular time, that we wouldn't get as many viewers. So in about 15-20 minutes here, I believe we should start to see them put the liquidity up. And then at the top of the hour, we'll see the session start. People can place trades. We're ready for action. Well, I'm concerned that because of the whole we're taking the tariffs off on electronics, so actually that we're not exempting anything sort of a deal, that there will be a little bit of drama here on this option. So I would not recommend trading it because you're going to have such illiquid market conditions. You know, if it moves on you, you could lose a lot and be hard to get out. But I do think that we are going to see some action here. I think a little whipsaw. Well, I wouldn't be surprised if there's not a gap of some sort. Like, I don't think that the treasuries are going to start at 109.24, but we'll see. We shall see. Oh, I should make sure that I got my new squawk going here too, by the way. There we go. Financial Times says U.S. consumers are showing increasing signs of financial stress as they brace for higher prices from the Trump administration's tariff on imports, raising concerns about a crucial driver of the U.S. economy. Okay, this is one that I don't understand. Like, I would agree that yes, consumers are stressed, but if you're expecting inflation, shouldn't be the thing you be buying as much stuff as you can before it goes up in price? But that's not what people are doing. I'm concerned that, like, if it does go that way, that everybody realizes that all at once. And I was looking at this because, I guess I've been thinking about this a lot because the IDs released a new set of headphones and they just seem so nice. They were like the perfect version of what I've been looking for to replace these, because these are almost gone. So what a kid is just gonna pick them up and then that's gonna be the end of it, right? So I want to replace them. Oh, if I get these nice new ones, I probably better do it before the price goes up, because they say this is the introductory price. Introductory price, $500. Wow. But the more that I think about it, the more I'm kind of thinking that they're probably not the right headphones for me anyways. Because they're like 500 grams, or like they're really heavy. They're really heavy. And like, if I'm just going to use it primarily here during stream, like starting a new job, I'll be going into the office. So if I am on the computer in the evening, it'll probably just be, well, I don't know. I don't know if I'll really need like good headphones for that. And at work, I probably just use my probably just use the Skull Crushers. And that'd be perfect work. So I just can't justify them Other than that, I really want them. Okay, the basis trade is leveraged into the carry trade, and being that these trades are almost risk-free, we're about to see banks and hedge funds implode. Well, there's definitely some over-leverage in this area, and we have almost certainly already seen some large institutions already kind of cuke their positions. And they're probably not all done getting rid of it, right? Like, there's probably still risk out there. So I think this is a situation where, again, we're talking about very complicated systems, right? It's very difficult to predict what those systems are going to do in any particular situation. Otherwise, if it was so easy to predict, then we would just always know what the price of things were all the time. We wouldn't need markets. Now, the split side of that is that there's still more system to come, right? Because the Federal Reserve can come in and do things. The Fed can intervene, but might not be able to slow the unwinding of leverage. Well, the thing is that all the Federal Reserve really needs to do is come in and say the right thing, and the treasuries would probably skyrocket out of here, right? And that would probably be enough to save it. But it's not going to undo the leverage. I mean, the issue here is that the laws and everything allow them to hold this amount of leverage. Because what's happening is they have all of these assets, and then they value the assets at the price that it closed at, and then that determines how much margin and leverage that they have. And those prices don't account for the impact of them selling it. If the mark-to-market rules had to have some basic model of market impact, then they wouldn't be able to take on nearly as much leverage, and we wouldn't be in this problem. And we've been yelling and screaming about this for years and years and years and years, and I don't think the politicians are ever going to do anything about it. So probably we will just wait until something blows up and then bail somebody out and not fix anything. Hedge funds selling, retail buying the dip. I think retail is numb after seeing dips being bought over the years. Well, you're generally always going to see that dip buying on sell. Like, that's always what people do, and that was even before 2008, right? And part of that is like, who can afford to do it, So, if you're a hedge fund, you are already invested in the market, right? All you can do is sell. Versus retail traders that have for a long time felt, I should put more money into it. Dip comes by. Okay, now I'm going to deploy that, right? That's why I think that plays out the way it does usually. Got 10 more minutes here. I could be wrong. I seem to recall last time we did this, me being wrong about when they started putting liquidity up. But I'm seeing some people on Twitter ask, do interest rates or yields come down, or do they go up? Well, the thing that I think is really funny about all of this is that it seems like everybody on the internet is expecting things to continue to get more and more dramatic. And the problem I see with that is that the more dramatic things become, the more likely the Federal Reserve is to come in and do something. They changed the pace of the roll-off. I don't feel that they're really that far away from doing outright asset purchases again. Like the scenario where interest rates continue to sell is probably the least dramatic one, right? It's when we have stagflation, right? Like the tariffs are enough to hurt the economy, but not enough for it to go into a cratering recession where the Federal Reserve has to do something. And there's enough concerns about inflation that interest rates stay high. Stagflation. That's the least dramatic scenario. It also kind of seems to me at this point one of the least likely scenarios. Because it's either going to get worse and trade war, does just continue to hamper markets, in which case we'll probably get a huge wave of deflation. Well, I guess it would kind of be a mixed wave of both inflation and deflation. Or they make a deal and, everything's fine. And then at that point, they probably continue to cut interest rates like they were planning. Here's something on Reddit where they're saying Trump denied the news that electronics would be exempt right before, but they haven't opened yet, so. I'm seeing some people on Reddit and so forth that seem to think that because that it was that they were going to exempt some electronics, and he's just reneging because he thought it made him look weak or something like that. I should continue scrolling down here on the DOM to see if I can get in 10 minutes. If I just really scroll, hard. I use two hands here. I'm using two hands. You can't see it, but I'm using two hands just for the ultimate scrolling. I don't know, at this rate, maybe in 10 minutes we could do it. Now I've just got two tired fingers instead of one tired finger. Wait, what? What? It just stops at 944? It can't go any lower? Well, that was a dumb idea. There must be a limit on how far a jigsaw lets it actually go. That's funny. Happy Sunday. Welcome, Claudio. Okay, here we go. 30 seconds, and I do think that we should see some liquidity get placed up here, so let's see. AMG, that's a name I haven't seen in a while. How you doing? Hope you're making the best of the opportunities. Not as much as I would like, unfortunately. Things have been rough for me the past 6 months, so hopefully we can recover quickly and get back to running. Okay, so it is past 3:30 and I'm not seeing nothing. Today is the day. Oh, well, not today. Definitely not today. I would not recommend taking any risk during the extended session. There's few ways to screw yourself up more than trading the extended session. Are you trading live accounts? Yeah. So I really like these micro futures. You know, I could trade ZN. And I don't know, like when I'm sim trading ZN, I do pretty amazing. But when I switched over to the micros and just, taking less risk overall, I started to do a lot better. All of a sudden it was like I'm winning almost every time. I'll still get these bouts that are really bad. Like I had that at the beginning of last year. Was the last like bad drawdown. But especially through all of this, my hit rate has been amazing. It's like I win almost every time. Now I'm also running a robot. And this robot it just goes with the market orders basically. So in these kind of market conditions, that's amazing as well. So, but I have not been doing a lot of placing a lot of actual live trades because I was between jobs. And so I don't want to take a lot of risk when you don't have more income coming in. Maybe it's 10 minutes before. Maybe I'm remembering it wrong and it's actually 10 minutes before. So I remember when we did this before, it was like I expected it to start at a certain time and it didn't. And then when it did start up, I wasn't paying attention and kind of missed it. Here's a video somewhere out there saying U.S. tariffs hit China hard, collapse worse than pandemic. Factories selling equipment. Well, that's one person. I don't know if I would completely trust that, but one thing I am noticing is everybody talking about how bad this is probably going to be for the U.S. and not talking about the negative effects on China. It's just really hard these days to get a really full I always say account. I don't want to say accounting, but like, all the information. Like I'm okay with the news source. They're going to have their own biases and so forth, but like I'm finding more and more news just leaving out critical details and stuff. Some of these memes on Reddit I think are really annoying, but some of them I think are funny. Like even if you support Donald Trump, you gotta admit that one's kind of funny. Tariffs on, tariffs off, tariffs on, tariffs off. I have concepts of a plan. Yeah. I think we're all pretty sure at this point that when we're looking at the alignment chart, like good versus evil and order versus chaos, that Donald Trump is somewhere on the chaos side of the spectrum, but people seem to disagree on whether he's chaotic good, chaotic neutral, or chaotic evil. Yeah, right. See, Fran Kurt says chaotic good. Seth was waiting for bonds being in the center of the attention is a whole lot. But you know what? Vital is one of the things that just drives me crazy is like, even when bonds are getting all of the attention, it's not like nobody's paying attention to me. You know, the thing that I've kind of realized, I think that my approach to like attention, I guess, is different from other people's. Because sure, I definitely get that rise from like social praise. And I want attention because I have things that I want to get out. And I think that it can help me and all that sort of stuff. But the whole like climbing the social hierarchy thing, I just don't care. I just think that a lot of that is stupid. I think that most of the things that people look at as like, you know, valuable things and you know, things to look at, like I'm going to pay attention to that person because they're high up in the social hierarchy. I find that that's like always like the worst place to go and look. You know what I mean? Know what I mean? What do you think about Apex founding? You know, I'm really not a fan of any of the funded trading firms. There's a place for them. I might at some point use one for this robot, although it's trading treasuries and I think that they all banned them. Oh, you were just egging me on, is that what it was? I know, I've seen your video. You know what? This is a good example. Is like that video did amazing. Like it did amazing at the very beginning. Okay, hey, we got movement. We got movement. Okay, so they are at the moment right where they closed 109.24 in ZN. Do bonds pay better than NQ in terms of movement and risk rewards? Well, so in terms of like leverage, which is to say, for your dollar, how many dollars could you potentially make in a day? NQ is tops. Because you can trade them for practically the same. I think the intraday margin is $500, isn't it? Maybe NQ is different. It's $500 for ZN. But NQ, like per tick, that, you know, once you consider how much it moves and everything, it moves a much larger range than ZN does. But, you know, I wouldn't look at it purely in those terms because that leverage works against you as well. And that's where I like the treasuries because, well, the commissions are cheaper and you don't have to risk as much. But there's also, I say, more kind of predictive signals, more opportunities for you to actually, you know, be making a good call. Whereas I think most of what you're doing in equity indexes is just random chance. Like the issue that you get in equities is the short-term moves that you're probably like within reasonable for a retail trader to be trading, you know, are just noise. And the times when there is a situation where you can really predict where things are going to go and, like, you know, hold a winner that really goes, that volatility can just whip you out of the position. Whereas in ZN, when those happen, it's like the easiest trade in the world. You just got to sit. I love MES because it allows you to have a huge stop loss and swing hard on the top. Yeah. But I've, you know, so like in MES, oh, you know, a good move in MES can be $100, right? A good move in the treasury is going to be like 125. Really good move is 250. So I guess they're kind of somewhat equal in that respect. But I've found that, like, you've got to really be working hard to be wrong to hit like a $500 loss in ZN, whereas that's just bound to happen when you're trading MES. This whole thing with the funded trader programs, getting rid of treasuries, it kind of makes me wonder if there's if not other assets will do it too at some point. It's just like a matter of time before people start doing similar sorts of things with other assets, like especially gold and maybe corn and copper. I don't know if oil would really work, but and then they just ban everything but equity indexes. Wouldn't surprise me, because I'm sure that they make almost all of their money from people failing funded trader evaluations trading equity indexes. So I wonder why we did not get update here on ZF, but we did on the others. And we did get them on the 2-year, but not the others. That's also odd. You have a bot on? No. Well, I'm the robot. If I even enabled it, I suppose that we can enable it, or we should enable it so that you can kind of see the market order imbalance. But it has some logic to tell it only to trade during certain times. So it will not do anything until tomorrow morning. Yeah. So my understanding is that the market should open in about 15 minutes. But you can see they're able to place liquidity. What type of work is your full-time job? I do site reliability engineering. So basically, I'm a tech guy, used to be a software developer, and now I do work that's more about monitoring systems and deploying them to the cloud. Some point I really would like to make my own trading platform. It's just with the situation right now, like everything has to be bootstrapped, and I think it would take a long time to make something that was really in a place, like minimum valuable proposition. That's the issue with my idea, is that the minimum valuable proposition requires a lot of investment. So we have to somehow bootstrap it with what we do from selling the NinjaTrader indicators and all of that. I'm sure there's a better way to market my NinjaTrader indicators. I'm just not. I guess I need to study marketing more, I guess. I guess I'll do that. I think the next couple of books that I want to read about management, and I want to read about being a product owner, because that is kind of the role that I would play in making my own trading system at some point. I mean, I'd be making it too, but eventually at some point, if we brought other people on, that's what I'd be doing, right? And then maybe after that, I should read some books about marketing. What's your outlook for Ninja with them being... I don't know, Wiz. I'm honestly, I'm really nervous about it. I don't know which way it's going to go. And everybody seems to be pretty split on whether it'll be a good thing or a bad thing. Granted, Kraken has a pretty good platform, it seems, and they've been doing things differently from other exchanges, and they seem to be the most serious from what I can see. So and I think that they wanted the futures. Yeah, I have lifetime support. I hope they don't kill it. Well, I don't think that they would ever kill it, but what they might do is they might make it so that you just don't want to use it anymore and you want to switch over to some other product, right? Like what they'll do is they'll merge, they'll say, oh, and actually we're going to have Ninja Trader 9, which is actually just the Kraken desktop, right? And then all of the cool new features and everything will be on Kraken 9. And but as long as you can still use it, I guess, right? Don't give them ideas. But it was like, it seemed like that would be a great time to start my own platform, but maybe if this trade war can heat up and we can get interest rates to go down instead of up, that would really help, you know. Okay, so there has been a little bit of movement in the liquidity, but so far it looks like we're not going to get a crazy gap. Not in the treasuries at least. ADHD Dom. Oh, that's a name. I don't. Oh, nice to see you, Seth. I'm in the overnight session. I was gonna say, are you new to the stream? Because I would think I would remember a name like that. It is kind of funny because I think that most ADHD people would like dismiss the Dom at first, but then once you get into it, it's probably like the most addictive thing out there, right? All of those tiny little changes in level 2, once you understand what they mean and everything, can really keep the dopamine going. Drink some. I don't drink. I've never drank, but I think that if I did, I'd probably be a really angry drunk, and I don't think anybody would want to be around me. It's an infusion. Because doesn't the, you know, being under the influence of alcohol really just kind of magnify kind of the things that you're thinking and suppressing anyways. And these days I just find myself being irritated and angry at everything. So we got about 10 minutes here till they open up. I saw a meme that had a Donald Trump holding up an executive order and it said arrays start at 1. I would definitely be upset. Wow, Frankfurt gifted 50 speculator Seth day trading memberships. Wait, I didn't know that you could do that on YouTube. Well, I thank you so much, sir. I thought that was only a Twitch thing. That's never happened before. Oh wow, it's just gonna keep going, isn't it? Wait, is it gonna print out 50 of those? This is gonna be interesting. It's gonna have to be like the last. Well, we actually have 30 viewers. I was really interested to see if you know, like what the viewers were going to be. Normally we get to between 24 and 32 viewers most days. And I kind of thought, well, maybe it being a Sunday, we might not get as many, but looks like we are. I kind of wonder if YouTube does something like, okay, Seth is allowed to have 30 viewers. And then like once we get to 30 viewers, it stops showing my stream or something like that, you know? Like, we have to give him just enough to keep him streaming, but not enough that it will ever help him. I don't know. I think that was 50 people. But we'll see. I might have been doing something because it seemed like it stopped for a second and then it started going again. So maybe it's just like the next person that comes in immediately gets gifted. Yeah. Is that what it is when new people get in? Oh, very good. Yeah. It's just kind of funny because your YouTube never really was very good with those things, and we've never really used very many of those features. We did have for a while to get access to the indicators. You had to subscribe on YouTube, but eventually we changed that. Oh, there is a Discord channel. How about streaming in Robo? We can do that. Oh, I might have to change some of my oh no, it's right here. Here it is. Multiple output, Rumble, start. I have Twitter set up too. I should set up Twitch. It's like the radio of the 1990s. We moved a little bit? No. There's a little bit of crossing though. Basically what will happen is, unless those orders cancel, they'll immediately get crossed when we open up. So let's check over here on Rumble now. The thing is when I was doing it to Rumble, it didn't, you know, like, there was like no discoverability over there, so streaming it didn't really do anything. Your bot video really helped me to get some insights on everything to make mine. Oh, very, very good. Wait, which bot video are you talking about? There we go. Yeah. Here it is on Rumble. One you made with the post bot analysis. It's not specific enough. What was the title of it? Gotta remember that some of these videos now are like 5 to 8 years old. So the Ninja Trader programming playlist. There you go. That's good stuff, dude. Yeah. No, those videos were like, man, I am putting in so much useful information about how, the programming side of things, and like they didn't really get watched. Okay, so I'm hearing over my news squawk that Trump is saying that electronics are still subject to 20% fentanyl tariff. So is he changing it again? I don't know. The key thing with that one was just like there's all these little mistakes that you make, right? There's lots of things where I thought, oh, this is working really great. And then I realized that it was, it was completely trash. I was falling for a noob mistake. Okay, here we go. Okay, so they did gap. They gapped down in the treasuries. We were at 25, we're now at 19. Actually, seems like a bit of buying from that, but and we're getting trading in the micros even too. Interesting. Well, man, that decline looks pretty ugly in the 2-year. Yeah, interesting. The yield curve flattened here. The speculator Seth has never traded this time before. It's not the first time that we've done this stream at this time, but it's not a regular thing. It is a special occasion. The first live stream that we ever did, though, was at this time. The first live stream that we ever did was when the Bitcoin futures started. That one was crazy. Before that, I would just record the session and I would be talking to myself and then upload it later, and a lot of people watched that. And then we started doing the live streams after that. And that first live stream, we had like 8,000 people watching or something. It was nuts. Maybe pull up NQ. Well, but we got yes. You should be able to, guesstimate the difference there, right? By the way, the equities jumped up. So it looks to me like that the markets are reading this so far as a Donald Trump did back off on tariffs a little bit, some more. So that's good. And so the equities have moved up and the treasuries sold a little bit as well. Now that's kind of funny if you're going to follow that kind of equity treasury correlation when we're already like at 4.5. Oh, I guess they're at 4.475. But that's good. It means I think we should watch this for at least an hour. But that means, less of a chance that we're going to get some really, really ugly sort of a thing, right? I should probably change the depth tuner here. I think that I'm supposed to have this at 10, right? No, that's not right. Oh yeah, Turek says, I remember a couple of months ago when you were talking about aiming to manage fund. Anything new on this? Well, so the current thinking on this is that there's a lot of competition out there and that you really have to be doing something pretty unique to be able to get attention. But we're not so sure that the idea of like starting a fund that everybody can enjoy would really work business-wise. So I've kind of shifted my focus to, hey, maybe we should make our own trading platform. That's kind of been the last 6 months while I've been out of work or between jobs. That's the correct euphemism, right? Well, while I've been between jobs, we've talked about making our own platform. And I've done a little bit of work on that, but I think there would probably be several months of really dedicated work to get something like that going. So we've also talked about making like a book or a trading course of sorts. And also talked about doing this, but more for stocks. And with the job that I'm starting up here, I don't think that the doing order flow for stocks on the live stream will work very well because I won't be able to be here for very long. And there's kind of those things with the fund. Like I've got, I'm going to continue to learn about and keep my eye out for opportunities on that, but I think that I need something else to move forward on that, and so and then I'm not going to have enough time to make a trading platform. So I think the thing that I'm going to spend working on the stream outside of just regular videos is going to be on a trading course. So make a course that I think that it might just be a book or a PDF or something like that. A really big one though. So one of the things that's always bothered me is like you buy a trading course or whatever, and it's a book, and then you read it, and it only takes you like an hour to read. Nah, this would be a big book, I think. Because what I've kind of found over time is, we have a lot of information to share, and people get stuck because they don't have that advantage of all of that financial knowledge to draw from. And so I think that if we made a course that allows them to get up to speed really quickly and gives them all of that financial background information, I think that would be really, really valuable. And it wouldn't be, the book wouldn't be okay, here's a strategy and yada, yada, yada. No, it would be more about, here is everything about the financial world and the markets that I think that you should really know before you get into trading. You know? And there will be, unless your book is supposed to be numbers and such, well, there will definitely be some discussion of the empirical research on these subjects for sure. But maybe it could be a recorded course. I don't know. The problem is that when you're talking about like a YouTube video, so like if I were to just, why don't we just make these free YouTube videos, right? Well, I don't think that it would work very well as a YouTube video like that, because I think to go into that much detail, they'd really have to be long videos. So the way that it kind of started out was like, well, what if we had like a workshop? What if it was like an online workshop and we did like 4 sessions of 4 hours each, right? But I don't think that there's very many people that can afford that right now. So that's where I came to, okay, well, we're just going to keep writing the book. And that's what I will dump the extra effort into right now. I did land a job, Brad. At least it's a 3-month contract to hire. They don't seem 100% sure if they have the budget for longer than that. But we'll see. I know a trader who made like maybe 30 to 50 hours worth of videos to explain something, but maybe a book would be better in its own way. Each have their pros and cons. Yeah. So, kind of thinking about it as a book. Yeah, congrats. Thank you. And at the very least, because I tell you what, man, one of the things that I see a lot of people saying is like, oh, well, you know, you're not so upset about the tariffs and everything because, you know, you're so rich and you know that it won't affect you or something like that. And well, yeah, I'm not so rich, but I tell you what, I don't think there's very many people that have felt more stress and anxiety around what's going on with the tariffs and everything than me. So, of course, probably people that actually have businesses that import stuff from China, they probably have a lot of anxiety. But I'm sitting here, for the last 6 months have been between jobs. It's average job search is about 7 months, so I came in right in line with the average somehow. But it's obvious, just been watching this and I'm like, this is not helping me get a job, right? Because I think that a lot of companies are holding back on moves because of the uncertainty. Is there anything you recommend to learn more about order flow? I've been seeing your playlists and all that. Do you think that's all I need, or should I go further into it? No, I would definitely say start with my playlist. So my order flow playlist, and watch that all the way through. And after watching that, watch order flow for a few months. And after a few months, you feel like that you're still missing something critical, then I would go and get like trades, quotes, and prices. So most of the empirical information that I'm getting came from this book, Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot. Hold on. Okay. Anyways, the new Squawk said something, but it wasn't no big deal, I don't think. Anyways, it's a very, very in-depth, it's like a graduate level quant type book. So, or if you really, really, really want to get deep into the science of it, then you go and read the book. But do you think the average guy can understand that? So Tariq says no. So at the end of every chapter, they really have like the key takeaways from what you get on that. So I do think that everybody can get something from it, but there's definitely going to be parts of the book that are just going to completely go over your head. Like unless you took graduate level math. There is some really advanced calculus and statistics in there. Are you using the latest version? I am not using the beta. I have not moved over to the beta. I will wait for it to be not beta. Math isn't very good. Well, yeah, but like I said, what I'm doing is I'm taking the parts that I think are the most relevant to retail trading and what you can do, and I put it into those order flow videos. And the biggest thing that I would say is get away from the idea that I'm just going to see some sort of pattern in the resting orders as they are right now. Like, oh, there's a big order at 256 and there's not anything around it. And that means something significant as to whether I should buy or sell. Get away from that. What we want to do is we want to predict future orders. And there's lots of information that we can use to do that. And the things that are going to really be predictive about what the future orders are going to be are things that you know about the market, like Donald Trump just tweeted something, or the context and sentiment and all of those sorts of things, right? Then you're coming in and you're looking at the DOM and you're watching, with the information that I know, the orders that come through, right? And so the real value in the order flow is being able to see what's actually going on right now. And then once you combine those things together, then you will find situations where the book and the situation can kind of give you really good entries. So that's how I would approach it. And what you get in my order flow video series is I'm telling you kind of like the proven stuff, like things that the order flow does do that we know are proven behaviors of the markets. And you can kind of watch them and see them on the DOM. And those things are, I think, really different from like what most people talk about when they're talking about Bookmap and the DOM and everything. Like especially Bookmap, because it focuses so much on what resting liquidity is, when really I think that what you want to look at is more the changes, you know? Like people will say, okay, so like there's a huge order here and then it pulls. So doesn't that make order flow useless? Well, if all you were doing was looking at the resting orders and what the current resting orders are, then I guess it would make it useless. But what we're doing is we're looking at the changes. So that big order canceling, that's just like one change. And I'm keeping track of the pace of changes and if that changes in reaction to other orders. Right? So you think historical liquidity and all that, which Bookmap shows, isn't really that important? You're not really. And I mean, really, the most important thing is the market orders and how that inside bid and offer react to those market orders. And so I'm watching like every time that it ticks up or ticks down, how many orders does it take for that? And does it all of a sudden change from, you know, it takes 1,000 contracts for each tick, and now all of a sudden it's gone 3 ticks on only 100 contracts? What changed there? Why are the offers pulling now? Right? That's what I'm really looking at. And I have some sort of an expectation about what the flows are going to be. So like, is that in line with my expectation of what the flows were going to be that day? Was I expecting something to happen that would possibly cause offers to pull or not, right? And if I do, then hopefully I'm already in position. And if I'm not, I might get in there. It's kind of looking like the treasuries might be able to grab that 24 again, but so far not happening. What's the reason of this unexpected live? The reason for this unexpected live is to watch the CME futures open. First hour of the CME extended hours. Because of all the hoopla and everything that's been going on, we expected there to be some volatility. And there was. Wasn't as crazy as last week, but there was some volatility, wasn't there? Tomorrow's going to be interesting. Because, well, so when the extended session starts, it's usually not for an hour or two before the Asian sessions get going, and it kind of seems like it's been more the Japanese traders that have been selling it the most. So you might want to keep an eye on that, but I think we'll probably leave before then. I think we'll watch this first hour. Any insight to gold trade? Well, I was just reading a bunch of the Wall Street analysts now all of a sudden seem to think that gold could go to 4,500. So it seems that gold has performed much better in this environment than other assets. It used to be like maybe Bitcoin has kind of stolen some of that demand from gold. But in this environment, Bitcoin has been acting as a risk asset and the money's been going into gold. So not really coming into silver yet, but I don't know if they're going to go up to 4,500. This was a story on Zero Hedge that I was reading this. Then maybe silver might catch up a little bit. I can only hope. Because otherwise, silver has kind of been a bum trade for the last few years. These market books are pretty expensive. I guess they have a wealth. Yeah, they do. Well, I mean, they're usually like in the $80 to $120 range, yeah. But you can probably find them all online for free if you really search. Read the book. Become rich from the information that you got from those books. And then buy the book, right? Some say 10K on a 10-year-ish market cycle. In gold? Oh, that's so crazy. That would be so crazy. At the same time, seeing gold over 4,000 is, over 3,000 is pretty like, wow. It's going. Gotta give the guys money, especially if I get rich off of it. Yeah. You know, honestly, I think that a lot of the price just has to do with the practicality of publishing it. That not as many people are going to buy a niche book like that, especially if it's like super, super complicated. And so they have to charge more because it's going to get less sales. Do you use time and sales? So I don't explicitly look at the time and sales, but if you look over here, if I get rid of my camera, that behind my camera is where I have my times and sales. But I mostly like to just, it kind of gives me an idea of the pace. You know what I mean? And that's something that I kind of see out the corner of my eye. That just shows me how often orders are coming in and if there's really big orders. So I ultimately I think that they're really just kind of a different way of looking at the same thing. Hard assets are, really supposed to get a real following in global turmoil? Well, except for that, like all of the other assets, like oil and probably most of the ags are going to be moving down, right? Because they will expect a weaker economy. Steffer says CL has been weird. Yeah, how do you view CL when it's trending downwards these past few days? I usually see market levels, so those first few days with constant trend downwards. Currently, CL has been weird, though. Well, and the flows in CL have been weird as well. For sure. So, Oil is always kind of one where, like, when I'm looking at it, it all seems to make sense. Sorry, when I'm not looking at it and I'm just seeing retrospect, it all seems to make sense. But once I really start paying attention to it, it just starts doing random things, you know? Oil is a really hard one to trade. You really have to understand. There is a lot to understand about the oil markets, and I don't know where you learn all that stuff. I don't think that there's really a whole lot of information on the internet about those things. You would probably want to learn it from somebody that, like, traded on an oil desk, right? I was studying the fundamental analysis of it. Do you have like a book that was talking about the fundamental analysis of oil? Basics, but it helped me out a bit. I want to find some guy who was in the oil market itself. Yeah. And it seems to me like those traders that it's a completely different world. Like the guys that trade stocks and the guys that trade FIC, those are very different worlds. FIC meaning fixed income and commodities, right? But then, you know, like I would say that like the 10-year treasuries are very different from like the ags. And the ags is really more like the commodity houses that trade those and everything. And sure, the commodity houses, they'll trade oil, but the biggest players in oil are the oil companies themselves. And so that seems like it's its own kind of group of traders. Found this server trying to find some successful oil traders. There seems to be some pretty knowledgeable guys, but I'm still trying to find people as of now. Yeah, well, I mean, in the retail space, I think that you kind of have to temper your expectations about like what is profitable, right? Like ultimately, I think that trying to say, well, how successful has somebody been, and I'm going to go and find the most successful person and try and learn from them, I think it's a flawed way of looking at it in trading, because the people that have made the most were probably just the most degenerate, taking the biggest risks, right? So having success in retail trading is very, very hard. And so, you know, I would just kind of temper the expectations about. I wouldn't be looking for somebody that completely makes their living from it, you know? Just somebody that's able to tread water you can learn a lot from. And what do you think? Is there more money to be made on an equities floor or a FIC floor? Oh. Well, so I would say that there's probably more actual trading desk jobs on the fixed income and commodities space, because so much of the stocks are automated, right? Whereas when you get into FIC, that there's a lot of over-the-counter markets and actually calling people up, and that's where they actually need a human, right? So there's probably more actual jobs in that. But in terms of like, if I was to choose stocks versus commodities, what would probably be more profitable for a retail trader, or more likely for you to be profitable as a retail trader? I would say probably stocks. I think you would probably make more money from stocks than commodities. Like commodities gives you huge leverage, so probably in a percentage terms, you could probably make like insane amounts. But like you could be lucky. Whereas in stocks, you know, I think that most of the people that trade stocks, as long as you kind of don't you manage your risk and you're not over trading and you're trading during a bull market, you should be able to at least make money, right? You might not outperform, but at least make money. And there are some opportunities, especially once you start to bring options and so forth, to really make big amounts of money, right? And the downside in the stock side is that you have to have more to start out with, right? Like you've got to have at least probably 20K just to get over the pattern day trade rule. So yeah, there's probably more opportunity in overall, but you have to start with a bigger wad. bought a funded account right now, you think I'll make it in this market condition? Well, when it comes to funded accounts, when we get super volatile, the result that you tend to get is just that you will pass or fail the account faster. I certainly do see a lot of retail traders like completely blow up during these situations. It's kind of funny how it happens is like, you know, when things start heating up and you start getting a lot of discussion, and then all of a sudden it just like dies down because a lot of retail traders just stop trading at that point. It's a real force at play there for sure. By the way, I forgot we were streaming on Rumble. Oh, yeah, we have 4 people watching on Rumble. Very good. Maybe I should try Twitch again. We could try Twitch again. It's been a long time. When we were trying Twitch before, there was so little discoverability on it that anybody that did come in and watch would just end up switching over to the YouTube. Yeah, Duval. I don't know. Like, so remember when they had the Republican debates? Was it the Republican debates? Yeah, it was the Republican debates without Trump. And you had to watch it on Rumble. But it doesn't seem to have really helped them. Then promote and go to the one with more viewers. Yeah. But like that's the whole thing is that it seems to me that if I'm below like 20 to 30 viewers, that like YouTube like pushes the stream. It feels like YouTube has a number that it wants me to be at. And unless there's some crazy headline in my video that just hits a certain breaking news story and I'm like the only place to get to it. Right. Other than that, it won't send me more than 32 viewers. Whereas Rumble was not going to send it to anybody. Like, I don't know. How did I get 4 viewers? Where did they come from? I don't know. How do you use backwardation in Contango, by the way? Well, what I would think of it as is like, so look up trading the basis. When I did the Series 3, when I was learning about commodities for the Series 3, and they learned about trading the basis and like thinking of it as going long or going short the basis. So once you kind of can think of it in those terms, it makes it a lot easier because otherwise you kind of have to go, so is this one is going down and this one's going up and they're going to come this way, or like, you know, it's just. But then when you think about trading the basis, it becomes a shortcut and you don't have to think about all those things. Do you think political analysis is a good playlist for fundamental analysis, trading of oil, or not? Well, you know, the issue is that the politics of oil are its own thing. So I don't really have anything specifically about oil. Like, that's the thing, is I feel like I don't understand that market very well. It seems like in theory that it should all work according to these principles and stuff like that, but then when I watch it, I just don't. There's people that they have an idea of how OPEC thinks and what they're going to do and how different countries deal with oil and everything that just is I can't see. And I don't know where they get it from. So, but I do have a video about like trading the news. That's one of the best videos on the channel, I think. Adhere do live streams always. No, this is just today. Maybe next week. We might do it next week too. We'll see. But we're just doing this today to watch the extended sessions start because there's been so much volatility. And so far, it looks like that the market has read this kind of shift by Trump over the weekend as a positive, and that markets are doing okay so far. Link it. Here, let's. So like when I come into videos. So these ones that are like about my indicators, I think these are really good if you use my indicators. This one right here, complexity economics, is, you know, if you were to watch one video, it should be that one. Because this is the thing that is like the game changer. The thing that the world doesn't understand that I think is going to change the future for the better. It's complexity economics. Okay. You know, so many of these videos. This one right here that like SMC smart money concepts stopped working is, you know, it's giving you information about a strategy that doesn't work, right? So from that perspective, it's kind of useless. But a lot of people are interested in that, so that should get way more interest than it does, right? Improving volume profile. This will give you some insights into order flow that, yeah, I think this will really, if you have like a more traditional understanding of order flow and volume profile and you haven't been listening to me yet, watch this video and you will see. This is like, oh, okay. Now I see where he's going. Why it's different. You know, a lot of these are just like, hey, things that you guys are doing, this is why it's not going to work for you. This one right here, like how to trade Federal Reserve policy, that's really valuable information. That's really valuable information. Oh, it's actually got 876 views now. That's not bad. See, these ones are the ones that are like the order flow videos. So like stylized behaviors and inelastic markets. Those are like so good. And then when we get before that, right here, trading the news, the ultimate guide. That one's great. It's kind of funny going back to these earlier ones, because when I look at the earlier ones, well, okay, trading computers, the hardware, that's the most viewed video channel, or sorry, that's the most viewed video on the channel. Should probably make a new one. It's been long enough to update maybe a little bit. Although I'd say the information in this is timeless. But I think that the later videos are so much better. A lot of this was political analysis. This was kind of like, it was fun, but then what happened was, you know, COVID came along and the whole primary thing just kind of blew up, and I was like, wow, that I didn't work out. The Ninja Trading script, the one I saw, is 5 years old. I wonder, yeah. Must one have a license in order to use? So, yeah, to use Ninja Trader's volume profile, you have to have a license. But there are some user-created volume profiles that you can find out there. I I don't know if there's one on the user app share, but there's some on futures.io, although you have to be a member of their forum for like $200 or whatever to download their indicators. But you can just search for it. There's free ones. I gotta see how I can get volume profile on different platforms. Does Tradeovate volume profile require a license? Oh, I don't know. Maybe it doesn't. But they have Tradeovate. It basically has a monthly fee to use Tradeovate though. So it's definitely not free. Let's close this window here so we're not blocking the DOM. I think I can probably close this too, but I have a prop firm. Yeah, with a prop firm account, it might be included. Not sure. So I was thinking about this. We were talking about this last week because we have this robot, simple market order imbalance robot, and it did really well last week. And if we had been trading it on a funded trader account, it probably would have passed. And actually, I didn't. I could double check, but I'm pretty sure that it passed. And but there's some problems. Problem number one is most of the funded trader combines don't allow you to trade ZN anymore. So that's a problem. And then the other one is that the version of NinjaTrader that I'm using right now, I have a better license, but I don't use it. I'm just using a free license. So if I wanted to submit live orders, it wouldn't let me. So I would have to I don't know if I can use that other license for a funded account or not. But I guess I could switch over to NinjaTrader brokerage and then I would be able to do it. Yes, going down slowly and ZN going up. Yeah. It looks like we're probably going to get that kind of gap to retrace. And then it'll be time to wait for the Asian session to start up, essentially. And we'll see if they try selling the treasuries again in Japan or not. Which, by the way, I don't know why I just keep thinking about this, but there's a lot of hoopla about that China or Japan are selling bonds and causing interest rates to go up and everything. But I haven't seen any evidence that suggests that it's the Japanese government themselves that are doing it. I think that it is probably basis traders. What basis traders based in Japan. What time is Asia session? Well, so I don't know exactly when the Tokyo exchange opens, but it seems like it's usually 2 hours from now or so when I see movement over there. So Branker says 2:20 from now. Whenever I see that, I want to say Frankfurt. Julian says 1 hour 20 minutes. But we'll see. If the treasuries keep selling, then it starts to get into more interesting discussions, right? I don't think it would take as much as the market seems to think for the Federal Reserve to come in and do something. So but once it starts affecting their buddies at the big banks. Are you a Linux user? It's a random question. I would say, well, I do a lot with Linux. I wouldn't consider myself necessarily a Linux user. Like, I do not have a Linux desktop that I regularly use. If I need to do Linuxy stuff, I will use like Windows subsystem for Linux. It's just the desktop experience in Linux is just still not there. It's just still not there. But, you know, for work, often we're dealing with Linux, so I know a decent amount about the Linux operating system. I had an interview with a different company the other day, and it was like the job was primarily for observability and cloud stuff. And, you know, so I was looking at the technologies they were using for that stuff and was all prepared for that stuff. And then they ended up asking me all these questions about Linux. I was like, man, this is not what the recruiter advertised to me. Wouldn't Linux be better for gaming because of Windows taking some of the performance? Theoretically. But like they have this whole thing now where you can play a lot of Steam games are like native on Linux and everything, but it doesn't seem like it makes that big of a difference. It's not, at least it's not a game changer. It's like a teeny tiny little increase in performance for like a way less convenient operating system, you know? But most games, no. I'm sure that in the future that will get better and better. Because I think games are relying less and less on features that would be like Windows specific. So my news squawk, when they don't have somebody going regularly, they just have a robot read off headlines. So it's reading off some headlines to me, and it just sounds so... I don't know how to describe it. It's kind of grating when the robot starts talking. They're so close to busting that high, but they're just not quite there. Fair enough. Now on the split side, I feel like that this is what some of the weakest that Windows has ever been. I feel like this is some of that, like Windows is at it the weakest it's ever been. Let's hope that Microsoft turns it around. For me, the most important thing is OPSEC. There's almost zero change anybody will ever get into my, zero chance anybody will ever get into my dev environment / source code on Linux, and I can't say the same thing for Windows. If you know what you're doing, you know what you're doing. I remember when we were in high school and we would do stuff. We would go to this applied technology place and do computer stuff, and so you wanted to get to the point where you were doing Linux stuff essentially, and my friend knew all of these funky little things that you could do in Linux, and we would kind of do these things where like you would give each other an account on the box and see how much. It was basically like, what do they call this? And like, I think that Amazon has a team that does this where like their job is just to go in and like screw things up, so that you can see how well protected you are against that stuff, I guess. And my conclusion from all of that was that if you don't know what you're doing, Linux is not very secure. There's a certain type of name for the team. They're the chaos team, chaos engineering. That's what it is. They have a chaos engineering team. So when we were in school, we would kind of have chaos engineering. We'd give each other access to the machines and see what kind of mischief you could do with it. It's not secure if you have an unencrypted drive where you can just boot into shelling. Well, it wasn't like that. He would have to SSH into the machine to do stuff. What was the most recent crazy thing that happened with that? Oh yeah, it was like they what was it? Somebody made this back door and contributed it, and like the only reason that anybody noticed was because some guy's build took like a few seconds longer to build. Otherwise, probably nobody would have noticed it. Yeah. I have a feeling we may retrace up or down. Yeah. So I will end the stream at the top of the hour. It's been a good chat. But it looks to me like that was the move off of the open, right? Was kind of a gap and then fill that gap. There could be another move when the Asian markets get going. But that would be like a different move. And then am I going to stay up all night? No. So we'll stick around for another 10 minutes. Yep, he noticed a 500 millisecond increase on SSH and investigated, yeah. Like, so something that's been happening in the C# world is people will make these, they'll make some library or whatever, and then everybody starts using the library. And then they'll be like, well, I can't afford to continue supporting this library anymore. You guys are going to have to pay me. Right? And like that's been happening to a ton of libraries, apparently. It's been happening to a ton of libraries. So there's just this whole thing that, like, can we really, you know, like there's a lot of question about the way that open source is done today, if it's really sustainable, because it's kind of seeming like a lot of people are, you know, it's just like it's like a thankless job and nobody has the time for it anymore. You don't get paid. And yeah, all these nerd coders who were open source contributors 24/7 finally got a family and have zero extra time, basically. Yeah. So now people are experimenting with all these things, like, to use my DLL, you just have to pay for it. Or maybe there's like some sort of a foundation that funds projects or things like that. Any thoughts on a dollar below 100? Oh, you know, it didn't even occur to me that that had happened, Julian. Oh my gosh, wait a second. Huh. I knew they were getting close, but it looks like that on Friday they did it. Well, yeah, that combined with the bond selling is a pretty interesting signal. Yeah, because it really does strongly suggest that people are just moving their money out of dollars altogether. And I think that to some extent that probably is happening. Especially if you're like, I think another thing that's happening right now that's really not helping is Germany being like, well, we're going to start printing tons of money and we're going to allow more debt so that we can build up our own army and stuff. So, there's a lot of people that are like, oh, the Europeans are going to keep printing money. Let's just send our money over there, right? But I think that the bond selling is probably like its own separate thing, right? Like, who knows how bad it will get, but at some point I would think that if that continues to get worse, that the Federal Reserve would step in and fix it, and then treasuries would probably skyrocket back up. But overall, the bigger takeaway is that it's not really going very well for, well, how should I put it? You're probably not too happy with things if you're Donald Trump. Yeah, it's totally counter to the policy the administration is running. You want the dollar to come down, but you also want the treasuries to move up and interest rates come down. So only thing I can say there is, you know, this is just getting started and it probably only gets more complicated from here. So I think a lot of people have this knee-jerk reaction to be like, okay, the market did its thing. That tells us what the reality is. And nah, this is just getting started, folks. With a weaker dollar, the imports will be even more expensive, so it's 5% more expensive because of Forex plus 10% with tariffs. Yeah. I mean, I think the whole thing that's going on here from Trump's perspective is they expect a transition to be tough. They expect there to be some economic volatility, but they don't want it to go into a recession, or at least they don't want to have a depression. And I think that they got more than they were expecting. I think that Trump did not like how much the market moved on this and the way this is going. And that was all before, as far as I understand, he was concerned with it before the bonds even started doing their thing. Well, now the bonds kind of seem to keep doing this stuff. I mean, if it's Japan selling, then that's huge, but yeah, he kind of alluded to it, saying that he responded to Jamie Dimon saying something needed to be done. Yeah, well, so there was a story from the Wall Street Journal basically explaining that he had decided that they were going to back off on some things by last Monday. So all of this bond market volatility that's happened, I think, has been after that. That admits he capitulated. Well, it's he didn't capitulate though. He backed off somewhat though, for sure. But I mean, with what they have on there right now is still pretty rough. It's still pretty rough, right? Okay, well, it's the top of the hour, and it looks like we did get above it. We're at 26 now. So I hope that momentum keeps up and we come back tomorrow and we're above 110. That would be nice to wake up and be above 110. But we'll see what happens. And then I'm sure that it will be another roller coaster. This is going to be one of those weeks that ages us, I think. I think there's going to be a lot happening next week. So we'll see you guys, right? But I got some other things to do today, so I will be heading out. I will see you guys tomorrow. We're here every day about 8:30 Eastern time, morning time. So see you guys then. In the meantime, stay